Hello, everyone. It's James Dobson, your friendly neighborhood realtor. Today, I just got a quick um, market update video for the month of January for you. I do want to keep this one quick because I don't have a ton of stuff to go through, so let's jump right in. You can see here, price, always the first question on everyone's mind. Price is down just a little bit month over month, but in general has flatlined and stabilized is probably a better word over the past few months after our very, very aggressive interest rate hiking cycle. I do expect that price should stay pretty stable here. If not, probably even have some pressure to the upside. It looks like people have sort of got accustomed to higher rates. We have a ton of people coming into the country and the province, which is putting a lot of stress on supply. Well, technically demand, but both. All right. Next, I just want to touch on some of the anecdotal experience that other agents are having and my own, just to say that activity is definitely on the rise. A colleague in my office was part of a bidding war with 23 offers. And yet you still hear on the news that the market is dead. So I think we're sort of behind that. Everything would indicate that we're in a pretty stable market right now. And I mean, you don't see 23 offer bidding wars in a slow market. So um, affordability is definitely still strained. We can see that it's heading back down in the right direction, which is good. This metric is comprised of three different data points. You have housing prices, interest rates, and wages. Um, Typically, the only tool that the government has um, is interest rates. At least that's what I thought. I wouldn't be surprised if, in an effort to get reelected, they did recommence some kind of stimulus checks to increase wages, because I don't think they can really affect real estate prices directly. They can't set a cap on real estate prices or anything like that, and they can't lower rates until inflation has come down, which leaves them wages. So, an idea that I'm toying with at the moment. Some of the more macro things that we're looking at is like insolvencies and arrears, both still very low. We do see rent is at the upper end of its band in terms of its percentage of household income, which is obviously not good. We do want to see that come down. We want rents to be more affordable. I'm hoping that um, with the 5,000 new condo rental units that we're expecting to get this year, we have a big increase in rental supply, which should help stabilize prices and maybe even push them down a little bit. Um, the other thing to consider is from an investor's point of view, condos are really popular amongst investors because very little work to be done. The condo corporation manages most of the things that an investor wouldn't want to do, and a real estate agent can do the rest, which makes them a great comparison to bonds. So right now, if you were to buy a 10-year bond, you're yielding something like 4% or 3 and something percent, which is really good, all things considered, because in the past, 3 years or 3 years ago, that would have only netted you 0.25%. So it's a huge increase in what investors can get in terms of a risk-free rate, which is what we call bonds. It's risk-free, or it's the closest that you can get to risk-free. And then if you look at the cap rate of real estate, which is around the same, call it 4% without a mortgage. So if you were to buy a condo all cash, the income that you generate minus your expenses would generate roughly 4% return per year. And so now you have investors questioning whether they want to be risk on or risk off, if they want to be in real estate or in something less risky like bonds, which could remove rental supply. So something to keep in mind. Lastly, I just want to touch on inflation because one of those key 3 points. I think inflation has peaked in the short run. We peaked at about 8% and we're down to 6.3%. So we've cleared about 1.7% downwards, which is good. We're only about 3% away from their target range, and the upper bound would be 3%. which I don't think is unrealistic to potentially happen this year. I think by year's end, we could be around 3% inflation, which would make a great case for the government lowering rates. Obviously, we're going into a more tumultuous economic time, and the government would definitely like to lower rates. The reason they do that is it increases demand in the economy. When the cost to borrow money is lower, people are more inclined to borrow, start businesses, buy assets, et cetera, which is great for getting the economy going. And so the key number that I'm really looking for is that 3% inflation target. Once inflation comes down to that level, if it comes down to that level, I could expect the real estate market to really go crazy as interest rates come down and people start coming back into the market in a big way. That's all I got for today. Again, if you have any questions, please don't hesitate to get in touch. I'll love to talk about it.